Hey everyone, thanks for joining. If you are waiting for our normal Wednesday conversation with Anna, you don't have to wait any longer. We are doing today because she was out at a mastermind learning all kinds of great things to share with you. We're going to talk about year-end tax planning and things that real estate investors can do. So let's bring Anna to the show. How you doing, Anna?
I'm doing great. Good morning.
Good morning. I so look forward to this conversation. I know you were at the event. You wanted to do our call Wednesday. I'm like, no, go to the event. Let's talk when you get home. So bring us up to speed on what you were doing.
Sure. So I went to a mastermind in Florida that I really enjoy, really focused on multifamily investing with a lot of top investors there. And then I bought an apartment complex this week, 96 units that we just closed on. And today I am looking for something really exciting and shiny that's going to save me a lot of money on my taxes.
Oh, well, you've perked my interest. You're going to look for something shiny, new, and it's going to save on taxes. I give
And
up.
my husband's going to really be happy and really love me.
Wow, look at all these hints. What could it be, people? You have any guesses? All right, let's see. What's the team going to buy?
Sure. So one of the things that I've been thinking a lot about this year, Michael, is taxes. And
Mm-hmm.
I'm going to make a lot more money than this year than I have in previous years between my job and rolling over part of my traditional 401k
Mm-hmm.
over into a Roth plan, which every dollar that I roll over is counted as taxable income because I
Mm-hmm.
didn't pay taxes on it when I contributed. And I'm going to be paying taxes on it when I convert it to Roth. So with that and the money I've made from my apartment syndications and my own rentals, I have a good problem that I've made a lot of money, but the bad thing is I got to pay a lot of taxes. So
Yeah.
I've been thinking of all the things that I can do to save on taxes.
Okay.
And there's one thing that I've known about since last year, which is called bonus depreciation. And I realized that you could take bonus depreciation on apartment complex and really basically accelerate a lot of the depreciation that you normally would take over like 5, 10, 15 years
Mm-hmm.
for things that belong to your complex, like appliances,
Mm-hmm.
carpeting, windows, other things other than the structure that normally have to be depreciated over 27 and a half years.
Mm-hmm.
You can take that depreciation all in 1 year, Michael. So you get a
Wow.
big bonus being able to expedite or accelerate that bonus depreciation. So this year I bought some apartment buildings and I will have several $100,000 in bonus depreciation this year just from the apartment buildings we bought. So that is amazing. But because I really want to focus on rolling over as much of my IRA as I can into Roth this year, I needed like another $60,000 to $75,000 in bonus depreciation to round out my year so that I don't have to pay federal income taxes.
Okay.
And one of the cool things when I was talking about a shiny object and something that my husband will be really happy about, he has been asking for a new truck for about 4 years.
Wow.
And as frugal as we are, we've talked about this on another episode. You know, when we have extra money, we buy more property.
Yes.
Unless we need it, we don't buy and spend, like crazy on lots of wants. So I
Right.
said, let's pay down my car first. And when I
Okay.
have no car payment, which I just finished this year, then we'll, talk about buying another truck. So
Okay.
he's wanted a truck. And, I'm like, we can't spend more than $30,000 or $40,000 on a truck. It just seems absolutely crazy to me. And maybe in California, that's not a whole lot, but
It's a
here in
lot.
Pennsylvania, I just, I think $40,000, $50,000, I could buy another 4-unit property.
Yeah,
So
exactly.
why buy a new car, spend all that money, and you drive it off the lot, and it basically goes down in value
Yeah,
immediately. So if you
exactly.
try to sell it, you can't get what you owe on it. So I found out in talking to a friend of mine who's also an investor that he bought a brand new truck and depreciated it 100%. And I said, you mean you can take bonus depreciation on a truck just like you can on an apartment building? And
Wow.
he said, wow, I knew I could do it on my truck, but I didn't realize I could do it on an apartment. And I knew I could do it on an apartment, but not on a truck. And
Wow.
so any assets that you purchase for your business, whether that be real estate or whether it be some other kind of business, any of the assets that you buy because of the new Trump tax code that went into effect a couple of years, you can accelerate the depreciation and take 100% of the depreciation on things that qualify. So
Yeah.
one of the things that qualifies is a truck, but it has to be at least 6,000 pounds. That means bigger and more expensive gets you the benefit. So we are now going to buy a much more expensive truck and get 100% bonus depreciation. And my husband's going to get to drive something for our business that he's much happier with.
So if we play the math out just for the people catching along, let's just say the truck's $80,000, just round numbers. You're going to be able to take all of that on your taxes, which means, if assuming you're at a 50% state federal tax bracket, you're essentially paying $40K for an $80K truck, essentially.
Yes, that would be right. And you know what's really amazing is not only that, but we're still wheeling and dealing a little bit. So we're looking at Dodges and Fords and like
Sure.
the 150 models or the 250 models. And I said, Kent, I want 0% financing. And right now they have 0% financing on Ford F-150s of any style and size, but they don't on the other ones. So I can actually go in and for our company, get 0% financing, put no money down, and have a car payment where I'm only, I'm paying maybe $800 a month, somewhere in that ballpark.
Yeah.
And I'm getting we're going to probably spend 50 to 55,000.
Wow.
100% write off, and only put like this year, maybe $1,200, $1,600 plus the title. So,
I feel so bad for you.
$2,000 and get a $50,000 bonus depreciation and save probably 30 grand on my taxes.
Well, that is smart year-end tax planning. There is no other way to say it. You get a shiny new truck. The husband is happy. He gets a toy he's proud of. You only spend $1,200 signing license fees, write it all off. 0% financing. There's nothing wrong with that. Yeah, awesome.
I know. I was so excited when I found out of this. So was my husband. He's like, so it has to be bigger. It has to be more expensive, and it meets your tax goals. It's just incredible. And, it's one of those things where I'm not a CPA and I'm always trying to find out like, what are the big changes and what are the big loopholes? And my accountant usually does it. But a lot of times you're not talking to your accountant until the end of the year. Right. So it's important to, throughout the year, find out what tax code changes are coming and what can I do to maximize my benefit and to pay the least amount of federal income taxes that I need to.
Absolutely.
And, a lot of people say, you should always have to pay federal income taxes. And granted, while I may not have to pay federal income taxes, I've paid my share, 6 figures of real estate taxes, locally to support roads and all those kind of things. So you're not really getting off completely free, but you're able to take advantage of those things that the government actually wants you to take advantage of. They're an economic stimulus, and they get you to spend money. And so, talk to your accountant and take advantage of every opportunity that you can. And this bonus depreciation, my understanding is it lasts through 2023. So you can take advantage of it over the next couple of years, and then it'll probably phase out. Mm-hmm. And if we do have a party change during that time, you can guarantee it's going to phase itself out.
Oh, for sure. Yeah. Party change, it's changing. But let's go back to the example of the apartment, just so people can get the scale and scope. And we'll use round numbers again. Let's say you bought a $10 million building. It just closed, December 1st or whatever.
I did.
There you go. I didn't know that. So 10 million, round number. I like round numbers.
Yes.
So you're going to go in and you're going to do bonus depreciation, or it might be called cost segregation first. Basically, you're going to split out appliances, carpet, windows, things that depreciate quicker than the building, right? Which at 100 units would be 33 years, I think, right? Minus land, all of that stuff. Can you give us a feel for, of a $10 million apartment, what are you able to segregate out? Is it like 10%, $1 million? Is it 5%, 500 grand? I mean, doing cost segregation, how big of an impact could it be?
This is a really good question. And I did one back in December of last year. So we bought a big property there, a 73 unit, about a $6.5 million purchase. And I think we got about $1.2 million in bonus depreciation on a $6.5 million property.
So that's roughly 20%, roughly.
It is. And in talking to cost seg companies, because I've bought 4 buildings this year, so we're in the middle of doing cost segs on 4 apartment buildings. So we're in the middle of doing cost segs with 2 different companies, just so we can kind of understand the differences and what they're doing and how they do it. Okay. And pretty much the rule of thumb is you're going to save about 20% of the purchase price. So
Yeah.
on our $10 million purchase, we actually just closed this week on a property that was exactly $10 million.
Oh, wow.
We expect to get about a $2 million bonus depreciation. And that would be
Wow.
split between the partners,
For sure,
in
yeah.
the amount of their debt or in the amount of their equity. So, just one simple apartment building can
Right.
save you literally a couple $1 million on taxes between the partners. And like you said, the process for cost segregation, it really makes sense to have an accounting firm do it that
Oh, for sure.
specializes in it once you're at about $1 million asset. So, it's going to cost you somewhere between $4,000 and $6,000 or $7,000 to get the cost segregation done.
Yeah.
And then they're going to come and see what things they can accelerate. On an apartment building, typically your depreciation is 27 and a half years.
Okay.
And on a commercial complex, I think it's normally 39.
Oh, 39,
if I'm not
yeah.
mistaken. But then you've got, 5-year, 12-year, 15-year property, whatever. So all of that gets accelerated. But I think regardless of the type of asset, it's typically 20% when you're dealing with apartment type buildings. Sometimes your commercial where it's like self-storage, you don't have as many things inside of it to
Yeah.
depreciate. You're not going to save as much on self-storage as you would, for example, an apartment building.
Yeah, makes sense.
And then if it's a vehicle, you can really, save all of it.
Wow. That is
Yeah.
awesome. And again, buying a part, you're playing Monopoly for real. It's like you're playing Monopoly and cash flow, like merged together. It's kind of fun.
It is so fun. And it's even more fun than the real game because you actually get real cash.
That's right.
But
I could
Monopoly was my favorite game ever as a child. Can you believe it?
Me too. No, without a doubt. Yeah. Monopoly was my jam. That's awesome.
Yeah.
All
One
right.
other thing to add, Michael, for your listeners that maybe aren't doing apartment buildings, because this is really important. You don't have to buy a large apartment building in order to benefit from bonus depreciation. So having a cost seg done, typically it's a cost benefit where, you want an asset of about $1 million. But I talked to my accountant the other day because I bought a 10 unit for my own portfolio this year for $700,000.
Okay.
And so I said, it's probably not worth it for me to spend $4,000 or $5,000 on a cost seg. Mr. Accountant, can you do it for me? And he said, basically, if it's a smaller property like that your accountant does that all the time for something called Section 179 depreciation.
Yeah.
And so you can go in, if you have a small, a duplex, even a single, all the way up to, however big it is, up to $1 million, your accountant can go in and say, okay, there's 10 units. In these 10 units, there's 10 stoves, 10 refrigerators, 10 carpets, 10 cabinets, and give an approximate value to what those things are. And he can claim the depreciation. So as long as you're within general guidelines where you're depreciating about 20% of the value of that property, your accountant can do it to you, and you could save several thousand dollars, on your properties to get it done. So ask your accountant to cost segregate any rental real estate that you have, whether it's a single or whether it's multifamily.
Yeah, I mean, just look at your $700K purchase. If you just stay on the 20%, that's $140,000.
Exactly. Yeah.
Oh, this is so much fun.
It's
wow.
amazing.
Wow.
This is why people continue to buy real estate.
Exactly.
And this is another reason why sometimes you see people, we're in a hot market, we're in the top of a market cycle, and people are still buying real estate. And one of the reasons they're still buying real estate is even if they can't get quite the same yield on a cash on cash return, when you add that you're getting year one bonus depreciation that can wipe out your tax liability just for purchasing real estate, it's a really powerful motivator that's keeping people buying even at the top of the market.
Oh yeah, no question.
So you might as well take advantage of it.
I agree. Any other ideas on things you should be looking at as we are in the tail end of the year before next year? Any other thoughts?
I think if you really need some work done on your properties and you've got the money to do it now, because, obviously it's a one-to-one savings when you have an expense. And so, sometimes it's like people are thinking about Christmas and they don't want to spend money, or they think it's winter. Get those contractors in there and get expensive work done now so that you can claim it on your taxes for this year instead of next year, if that makes sense to do it.
Yeah, for sure. The other thing I'll do is I'll look at my numbers in December and to figure out is there anything I want to prepay, for the year, right? I rent now a space and maybe I'll just prepay the year in December. So, there's just other things you can do to play with the expense numbers.
Sure. Then thinking about putting money in retirement accounts or, anything that's a tax deferred account where you can save money by putting something in there. If you've got some money and that goes along with your financial plan, that can be a smart thing to do as well.
Very, very cool.
But for me, nothing as exciting as the bonus depreciation.
No,
So
clearly.
go buy a truck.
Yeah, go buy a truck.
Business.
6,000 pounds for your
Yeah.
business. Exactly. Very,
One
very cool.
other really important caveat that I just thought about, Michael, is in order to take advantage of all of the bonus depreciation allowable to you, you have to be a real estate professional. So you and I are in the good boat that we are full-time real estate. So we have an unlimited amount of bonus depreciation that we can take.
Right.
If you are in a W-2 position and you have some passive income, you can use bonus depreciation, but it is limited. You got to talk to your accountant because there's multiple different limits in there. I think there's a $25,000 limit, and then you have to have a certain amount of active income, to offset the passive. So talk to your accountants before you do it. But the more you can take a whole lot more if you're a real estate professional than you can if you don't.
Yeah, no question. This has been a lot of fun. I think I'm going to stop it here. Year-end tax planning, bonus depreciation, getting a truck for 50% off, 0% financing. Just Anna's just crushing it out here. And she just closed on a $10 million 96-unit building if you're not paying attention. Pretty awesome.
It is. This has been a crazy, crazy week. We have new employees and new contractors ascending on the property and new systems and all that kind of stuff, but it's all so fun.
Very, very cool. Well, thank you very much for doing this. It's always a lot of fun. Thank you.
Thank you so much.
You got it.